Good morning, good afternoon, everyone. Welcome to this Forward 2021 session on the future of ocean freight. My name is Andrew Schulze. I'm the Global Head of Ocean Freight and Trucking here at Flexport. And today I'm being joined by Lars Jensen, who is CEO and partner of Vespucci Maritime. I've had the pleasure of talking to Lars several times before. I'm very excited to be joined by you today, Lars. You are, as most people know, a long-term veteran in the world of ocean shipping and ocean freight. So welcome to you, Lars. Excited to talk to you.
Thanks a lot for inviting me to come on yet again.
Always a pleasure. We always have a bit of a disclaimer right here. What Lars and I will talk to you all about today is the current snapshot, the current situation in the world of ocean freight. We all know it's ever changing, very volatile. So please keep that in mind the coming time. What we talk about today is very much the current situation. Now, Lars, the last time we connected 3 to 4 months ago on one of the Flexport webinars, we talked about this vicious cycle in the world of ocean freight, as we like to call it. It all starts with supply and demand not really jiving. We have way more demand than supply throughout the global supply chain. This has continuously been exacerbated by labor shortages when it comes to available labor at the ports, with the trucking companies and whatnot. And then we have also continued to see partial shutdown in some of the ports because of COVID-19 cases. Even though the general COVID situation has improved globally, it is still impacting global trade. All of this continue to lead to record high port congestion, with the number of vessels waiting both at origin and at destination basically setting new records sort of month for month. So we are still stuck with sort of the world's biggest traffic jam, the world's biggest queuing problem, which is essentially leading to continuous vessel delays. I think the last stat we saw last around global schedule reliability in terms of vessels actually hitting their schedules was down to below 34%. On the Trans-Pacific trade into the US West Coast, we actually saw schedule reliability lower than 10%, which is just madness, right? And then lastly, the equipment or container box shortages we've been seeing for 18 straight months now are still impacting this to some extent. We all are acutely aware that the world has produced more container boxes that have also been delivered, but because a lot of them are still stuck in the wrong places, we are still seeing pockets of the container box shortages out there. Now, Lars, this has been going on for 18 straight months or so. For how long should we expect this to continue? What does your crystal ball tell you?
At best, we could look at normalization in 6 months' time from now, but that is if you are hopelessly optimistic. I would believe this is going to take longer, and it's not going to be a smooth ride. The problem, as you're illustrating quite well here, is it's a number of different intertwined elements. And once we start to try to fix one element, it has ripples all the way through. So at the very, very best, you're looking 6 months down the line, more realistically towards the end of 22. And if something goes horribly wrong, this could last into 23. But again, it's not going to be a stepwise. It's not going to be from one day to the next, then everything is going to be good. It's going to be this bumpy ride where things will get better, then slightly worse, slightly better, until we get back to normality. But it's a long ride from now.
In our previous talk, Lars, you mentioned this potential water hammer effect, where all of a sudden potential global demand could sort of reduce itself, which could save the day. Is that still a scenario you could foresee, or how do you see
that? That is still very much a potential scenario. The key here is what happens in the U.S. economy. I mean, globally, we actually don't have a demand boom, but in the U.S. there is this very strong demand boom. You can look at the U.S. is great. They have macroeconomic data ranging all the way back to 1959. So we're literally covering the entire history of container shipping in the US. And the behavior of the US consumer have deviated dramatically since the pandemic hit. It's far beyond anything we have seen before in terms of shift from services to goods. This behavior is something that has been changing gradually over 2 generations. And it would seem unlikely that 350 million Americans suddenly decide to dramatically change their view on the entire world, looking at what they built up over 2 generations. It's much more likely that once given the opportunity, behavior will revert slowly back to what we saw. The question is, how long is that going to take? If it changes very quickly, then we're going to get the water hammer. Then you're going to see a sudden sharp drop in demand. If it happens more smoothly, you're not necessarily going to see the water hammer. The closest comparison we have is actually the change in consumption behavior when the financial crisis impacted. There, the impact took place initially over a couple of months, which is the same as we saw here. And after the financial crisis, it actually took about 2 years until the pattern was firmly back on the normal trend. The question is, what's going to happen now? Because we're so much out of whack with normality, also far beyond what we saw with the financial crisis. If this takes place over 2 years, we won't necessarily see the water hammer. But if people decide over the next, say, 3 or 4 months that life comes back to normal and we're going to spend more on services, less on goods, then it's going to be a very dramatic impact that we're going to see in early 22. And this is where the problem comes with forecasting, because this is not about forecasting container volumes anymore. This is about forecasting the mindset of 350 million Americans in a situation where they suddenly for 18 months were not able to behave the way they actually wanted. And how long will it take for them to come back to a normal state of mind?
Very insightful, Lars. So different scenarios, it sounds like, but you would expect sort of in a 6-month horizon that things will improve to some extent, at least that being sort of the most likely scenario.
Yeah, at least improve, not necessarily get firmly back to normal, but for an improvement. In the very short term, it's more a toss-up, because we could see a gradual improvement from now onwards, slowly, or you could actually see a worsening of the situation leading up to Chinese New Year. If the import boom continues and we don't get the bottlenecks out of the way, which it doesn't appear right now we're going to get, we could actually get a third stage. Stage 1 was in the ramp up to Chinese New Year here, early 21, where we thought a queue of 30 vessels was bad. There was a gradual improvement in early summer. Then it got really bad to this queue of 70 vessels off Los Angeles just 3-4 weeks ago. Now the so-called improvement is that now we're down to 50. But let's not lose sight of realities. This is still worse than what we had in the beginning of the year. Yeah. And as I said, it's a toss-up. We can continue to see an improvement, or we could actually see a lead up to Chinese New Year where this gets even worse before it gets better.
Very insightful, Lars. So it doesn't sound like you expect to receive all of your Christmas presents in a bit more than 2 months out from now.
I would rather expect the Christmas presents that can be bought on the shelves. I would be happy with those, but ordering something, that might be quite a while before it arrives.
Makes sense. Thanks, Lars. Let's look at a snapshot of sort of the actual supply and demand balance when it comes to the demand for goods and the vessel space available out there. And what you see in this graph on the different lines right here is that demand for space is by far exceeding both the planned space and the actual space. But what's really worth calling out is the fact that the actual space in the red line is not really increasing, despite the fact that ocean carriers or ocean steamship lines have actually deployed a lot more capacity. Reality is that this additional capacity is ending up in queues in the ports in all this congestion. So it's not really increasing the net effective capacity out there. I think we saw a pretty mind-blowing stat from Sea Intelligence the other week, where we learned that 13% of the world's capacity in terms of ocean container capacity was stuck in queues. And when we zoomed in on Trans-Pacific, it was actually more than 20%. If you do the math, this actually corresponds to the world's third largest ocean carrier actually withdrawing their entire capacity. That's sort of the magnitude of the impact. This can be sort of a little sort of counterintuitive. So Lars, help us understand the logic here. More vessels are sort of hitting the water, but it's not really doing the trick. How does it work?
Yeah, well, basically the way it works is there's this old saying in shipping, a vessel makes its money while it's moving cargo. It doesn't do anything when it sits still. And right now it simply sits still. Let's make it extremely simplistic. Let's say normally I'm using 5 vessels on a Trans-Pacific service. They are 10,000 TEU each, so I can move 10,000 TEU every week. Now suddenly everything grinds to a halt and all the vessels tend to become a full week delayed. Now either I need to insert a vessel number 6, or effectively I've actually removed an entire vessel from the string because it sits there waiting. That's also why we have this almost harmonica-like effect where a month and a half ago, we actually had a surge of capacity put into the Trans-Pacific that loaded a lot of cargo in China, actually coinciding with Yantian and Ningbo reopening. Shippers were happy finally the cargo can get moving. Now all these vessels arrive at the same time, creating congestion. Well, guess what? All the vessels that are sitting in a queue off the California coastline, they're not going to make it back in China in time. So all the schedules that we thought we were going to have with the capacity we thought we are going to have is not happening. You're seeing blank sailings coming up on the Trans-Pacific because the vessels that were supposed to be deployed are not going to make it back in time. So you're going to have this seesaw movement back and forth for a while where there'll be a surge of capacity and then suddenly a raft of blank sailings because physically the vessels are not there. And this is where the problem gets compounded and goes beyond the US. Because as a carrier, I now have a choice. I have a scheduled sailing from, say, Shanghai to Los Angeles. I don't have the vessel because it's stuck outside Los Angeles. Here's my choice. I can blank that sailing on the Transpac, or I can look at another vessel I have. It's a vessel that is supposed to go to Europe, and I can decide, well, you know what? It's actually not going to go to Europe. I'm going to let it continue over to North America. That way, I move more cargo to North America until this vessel gets stuck in the queue. But now I have a shortage of capacity going to Europe. Now all of a sudden a Belgian importer will find he can't move his cargo, not because the Belgian market is strong, but because the North American market is strong. That are also the ripple effects we are seeing. We are seeing vessels, very small vessels, especially put into Trans-Pacific, in some cases Asia-Europe too. Vessels, some of them even below 1,000 TEU, which is obnoxiously small for such a trade. They're being pulled out of intra-Asia, they're being pulled out of the Pacific, they're being pulled out of Africa, where capacity is now lacking. I've been talking to port and maritime authorities, some especially smaller island nations, both around the Indian Ocean and the Pacific Ocean. They have a genuine problem. They simply don't have enough capacity now to support their nations because some of these vessels are being withdrawn and placed into the Trans-Pacific. And this is where the irony comes in, because the moment they are being put into the Trans-Pacific, well, on the day of sailing, it looks like we are increasing capacity. But the moment we then get to the other side of the Pacific, we hit the traffic jam, and then we're effectively removing the vessel. So now that vessel is neither serving the capacity on the Pacific, it sits still, and it's also not serving, say, the small country in Africa it was supposed to, because it's been entirely withdrawn. And that is why we then end up at the end of the day with effectively 13% of global capacity being gone. And maybe to put that also in context, most might remember the disruption when Hanjin went bankrupt back in late 2016. We should keep in mind, Hanjin going bankrupt, that only removed 3.5% of global capacity. And that was only removed for 2 to 3 months, because then all those vessels were effectively snapped up by other entities and they were put back into operation. What we're seeing now is 4 to 5 times Hanjin.
Yeah, it's indeed significant, mind-blowing. So it's very interesting what you're saying, Lars, on these extra loaders. I mean, the last time I Googled the definition of extra, it meant sort of something more. But you're basically saying that all these extra loaders are actually not increasing the net capacity because they're fueling the congestion issue.
Precisely. And it's one of these where it's not because anyone really is doing anything wrong. It's because everybody is doing what they can seen from their vantage point. As an importer, I am desperate to get my cargo moved as soon as possible because I know there's going to be delays. So I put pressure on the carriers. Can you please have more departures out of Asia? The carriers will then do what they can to actually have more departures out of Asia. And everybody should know, I was about to say everybody knows, or at least should know, that yes, we can put the cargo on the vessels in Asia, but it's going to hit the gridlock. Yeah. But what is the alternative? The alternative would be for the carriers to stand up to the shippers and say, dear shipper, I know you're desperate, but you know what we're going to do? We are going to reduce capacity. We're going to blank sailings, because in the short term, that will allow us to fix some of the bottleneck issues. But then you're going to be stuck with a few 100,000 boxes that we're not going to move out of China. That would just not fly in any market. And by the way, that would be seen as collusion by the carriers, reducing capacity in the current market environment. So there really is no easy way out of the current fix.
So you're basically also still saying, Lars, it makes sense if you are a shipper and you can find available capacity on some of these so-called extra loaders, you should still jump on them, because if that can get your cargo moved,
it can get your cargo moved, and then you can sit down, cross your fingers, and hope that the vessel your cargo goes on might be one of the ones that only wait a week and not one of the ones that wait a month. But you don't know by the time it departs Asia.
Yeah, makes sense. Super insightful. Thanks, Lars. Let's move on. We talked a little bit about the congestions at both origin and destination. In here, we have a snapshot of the overlook of the Port of Los Angeles. The current amount of vessels that are waiting, to your point earlier, Lars, is hovering around sort of between 60 and 70 at the moment, with port waiting time of 12 days, which is just unheard of, record high levels.
Yeah, you can say I understand the urge to see terminals expand opening hours, because when you look at, for example, images like this, it would appear that it's the terminal that's a bottleneck. But I'm actually not convinced that opening the gate hours would change very much. Because one of the aspects we need to keep in mind is it's so visible, the vessels that are waiting. It is so visible that fine, you have all these boxes standing in the terminal. But one of the things that is not so visible is how slow the importers are in actually picking up their containers. When you look at the data for the dwell time has exploded since the end of 2020, because the shippers are simply not picking up the cargo to the pace that we're used to. And here's the problem from a terminal perspective. If the shippers suddenly take a lot longer to pick up the cargo, my terminals gets jammed. You have a very real situation right now. Some terminals actually have idle equipment. They could handle more vessels. But the problem is, if they start handling more vessels, they have nowhere to put the containers. That is the issue. And then we have to look at, why is it the shippers are not picking up their cargo? That sounds very counterintuitive, because the only thing you see are obvious headlines where importers are desperate to get their cargo. So why are they not picking it up? This is where some of the inland problems start to rear their head. There's not enough trucks. And if there's a truck, there's not enough truck drivers. And if you finally get those two, then there's not enough chassis. When you finally get all of those, then you can pick up the container, drive it to the warehouse, but the warehouse is full. And if it's not full, there are many issues now with not having enough labor to actually offload the containers when it arrives at the warehouse. So part of the problem is actually not with the ships, it's not with the terminals, it's all the way out, almost at the last mile delivery, that's the bottleneck. And when that is not happening, then that gets displaced all the way back to the terminal where the containers are not being picked up. If you expand the number of gate hours, if one of the main problems is you don't have enough labor to actually come down and pick up the containers, expanding the gate hours is not going to change that to a very great degree.
Yeah, this is super interesting. I very much agree, Lars, that a lot of the bottlenecks are indeed on the land side. I mean, in addition to what you mentioned on the trucks, warehousing, chassis, etc., also the train racks are congested, right? So how about if we imagine a world then where all of those supply chains were operating 24/7 with enough labor? Would that do the trick?
You see, that would do the trick. And then we're getting back to the timeline. And this is where we do have a good comparison, because we can look at the beginning of 2015. In beginning of 2015, if you stood down at Huntington Beach and looked over the ocean, you would see queues not quite as large as they are now, but pretty close to, because you had a labor dispute between the Port Workers Union and the terminals at the time. So that caused massive congestion problems. That was clearly on the terminal side. And from the point where there was an agreement between the two parties, and until you can see on the statistics that all the vessels were completely back to normal operation, that took 6 months. So that was 6 months in a world where the problem was purely on the US West Coast and purely terminal related. Now we have an issue that is global and ranges far beyond the terminal. So that's why, in the most wildly optimistic case, we are looking at 6 months to clean this up. Realistically, it's going to take longer.
Yeah, very interesting. So you're basically saying that even though some of the terminal yards look like ghost towns after midnight, it takes more to fix it than just having 24/7 operations there. Yeah.
Yes.
Lars, how about the upcoming event in spring 2022 on the US West Coast ports? We have the upcoming contract renegotiation between the port workers represented by the unions and then the terminals and the steamship lines. How do you foresee that going down?
Yeah, I see that as a very black and white issue. There are basically two paths this can go down. It can either go, and that's usually also based on how it normally pans out when you have these negotiations. Either it becomes very benign and there is an agreement and it becomes a non-event, or it becomes a major event, like when I mentioned, for example, in 2015, when we had bottlenecks the size of what we see now, or even worse, if we go back to 2002, where we had an entire 10-day shutdown. The way I see it's going to be either one of the two. If I was to lean to any of those two outcomes, I would actually lean now towards it's more likely we're going to have the benign scenario. At the end of the day, this comes down on one part to how much are the carriers and terminals at the end of the day willing to really play hardball on this one and create an even worse issue that's not in their interest. And on the other hand, given the enormous disruption this is now causing into the wider US economy, you can also argue politically it might come down to the port workers union don't necessarily see it in their interest to make this a major issue that could easily backfire as well. So if I was to lean towards anything, it might be that this might actually be a relatively benign affair. Yes, is it likely going to be then a deal that will increase cost? Sure. You can then argue we have a supply chain right now that has demonstrated we can increase costs and prices tenfold and things will still move. So this is going to be more about can we handle the disruption? But there are no guarantees. And we have seen before major disruption coming from a failure to reach an agreement.
Indeed, that happened a handful of years ago. So yeah, this will be an interesting one to follow. Although it's spring 2022, it's all starting slowly but steady.
It's just around the corner.
You mentioned cost, Lars. Here we have an overview of the ocean freight rates based on one of the indices, SCFI. The story is pretty clear here. Rates have 5x relative to historical averages, but we are now seeing a sort of plateauing effect where rates have started to sort of keep steady. Also fueled by the fact that some of the ocean steep lines announced that they were not going to increase rates any further. And we've actually seen occasional drops last week because of the current situation with factories in China, where some factories are only operating at 70 to 80% capacity because of the power initiative to effectively reduce energy, based on also scarcity around coal resources. We recently did a poll with many of our clients, and they actually expected that production would be indeed reduced 20 to 30% in the coming weeks. Now we know that the demand for goods is still strong, but if it's not possible to produce more, and therefore you essentially have less good to ship, could this result in a situation where rates will deteriorate further in the coming weeks and months? How do you foresee this, Lars?
A couple of things. I mean, first of all, we're then assuming in that scenario that the Chinese will definitely reduce their overall production capacity. I'm not necessarily sure that will last. Secondly, from the importer side, because the demand is there, that will just add phenomenal pressure on production facilities elsewhere in Asia. And at the end of the day, that will still cause an upwards pressure on the trans-Pacific vessels. Sure, they might then skip a few port calls in China, but then you're going to see more port calls in Thailand, Vietnam, Cambodia, the transshipment hubs in Singapore, and so on and so forth. And another thing to be mindful of is, I mean, it's illustrated perfectly well in the slide you brought here. If you look at the purple line, I mean, we have Chinese New Year, and then after Chinese New Year, everybody was beginning to relax a bit and say, fine, we are beginning to see this come back to normal, only to see this skyrocket when we then got into peak season. Beauty is a bit in the eye of the beholder. If you're desperate to see rates come down, yeah, you can see signs of that in the last few weeks, also in the graphs here. but that's no guarantee. What we have ahead of us is going to have the normal ramp up to Chinese New Year. If the bottlenecks are not resolved by then, and it doesn't seem that they're going to be resolved, it doesn't take much of an added boost in demand, then we're going to have bottleneck problems at least as bad, if not worse, as what we're seeing now. So we could be on this slow path downwards, but we could also just be in an interim before we see an added boom leading up to the next Chinese New Year.
That makes sense. And you see that sort of holistically across both Trans-Pacific, Asia to Europe, no difference there. It's sort of the general.
Exactly, because this is the cascading process. When you are up at a point where, and again, mind you, this is the SCFI. There's an enormous spread here. There's sometimes a spread of more than $10,000 per FFE between the high and low rates in the market. But vessels will go where the rates are the highest. So there is not a single trade in the world that is immune to this. If you are in a trade with relatively low freight rates, there's an overhanging risk that vessels will be removed from your trade and put into these trades where you can make $10,000 to $20,000. You're even at a point where I've seen individual deals that are now breaking $30,000 for people desperate to move their cargo.
Yeah, we're seeing that as well. Let's have a look at the next couple of years. This overview is basically showing the forecasted demand growth against the forecasted supply growth in terms of vessel capacity. What we see here, Lars, is actually sort of light at the end of the tunnel come 2023, where the vessel supply growth will exceed demand growth, at least based on sort of the expectations from key industry sources. Now, this is, I guess, good news for a shipper in terms of vessel space, but we just talked about the landside congestions fueling a lot of this. So how do you see this, Lars? Will this save the day, or how to understand?
Yeah, basically no, because anybody planning for the near term, so Q4 21 and all of 22, there's not going to be any benefit of this. What we're going to see is a significant injection of additional capacity in 2023. But by then, unless something really untoward happens, we are going to see the resolution of the bottlenecks. And one thing that's critical to keep in mind, whilst we do have a capacity shortage right now, we don't have a shortage of vessels. The problem is not the number and the size of the vessels. The problem is how long they're sitting idle, waiting outside a port. Globally, we are only moving slightly more containers now than we did in 2019. In 2019, we didn't have a problem with capacity. So what we are looking at here is not so much a resolution to the current problems, because it isn't. What we're more looking at here is an underlying structure where the upcycle in the industry, seen from a carrier perspective, isn't an upcycle. It's just hidden underneath the pandemic noise. That upcycle will likely come to an end in 2023 and create a somewhat downwards pressure structurally on rates in 23 and 24 going forward. But that is not going to save the current crunch, not at all.
Yeah, Lars, if we look at the forecast in terms of truck drivers, in terms of supply and demand, that's less optimistic, right? Same when we look at the forecast for warehousing workers.
Yes.
Okay, so with all this uncertainty, Lars, how to best plan for next year onwards if you are a shipper? I know you consult quite a few shippers out there. Everyone, of course, have different supply chains, different goods, different needs. But what are some of the key recommendations you leave with your clients at this point in time?
Basically, it is take a risk-based approach. Don't try to think you can predict accurately when the market will turn. Don't try to think you can predict accurately what the rate levels are going to be, because realistically, nobody can do that right now. This is more about taking a risk-based approach. How much is supply chain certainty worth to you? How much are you willing to pay in freight rates and lock in for sometimes a substantial amount of time? And I know, there are pushes now in the market sometimes for 2 and 3 year contracts. Let's not right now get into the discussion of whether they will de facto be enforceable or not, but you just need to think of it from the perspective, if you enter, say, a 3-year contract right now, it is exceedingly likely that the rates you would lock in now, they're going to be much higher than whatever the spot rates are going to be 3 years from now. That's almost a guaranteed certainty. But that's not the approach to take. The approach to take is, if you do that, you can to a much higher degree then be guaranteed space in the short term right here and now. How much is that worth to you? And you can also guarantee space where in the short term, you're going to pay much, much less than these extreme high rates you saw with the SCFI. So this becomes, again, a risk-based approach. How much are you willing to pay to make sure your cargo can actually get moved? What is that worth to you? And this is somewhat different than, I would say, the mindset of generalizing a bit here, but of the entire industry the last 30 or 40 years. The mindset has been there's always enough capacity. This is just a matter of negotiating price. But right now we're in a situation where there's not enough seats on the bus for everyone. Somebody's going to have to be left behind. And what is it worth to you to be guaranteed that you can actually get a seat? That suddenly has to start to come in again. And this is the approach you need to take for 21 and 22. If you try to go into this from the perspective, I need to get the best possible price, you might be lucky and you might get it, but that also increases the risk that if the current problems persist, your cargo is not going to move.
That makes a lot of sense, Lars. How about sort of enforceable contracts as a whole? How do you see those? Are they valuable? At the end of the day, it's enforceability on both sides, right? Between a carrier and a shipper, where if you don't show up, you still have to pay, and if the carrier doesn't deliver, they will have to sort of make up for that one way or the other. Is that something you recommend a shipper out there, or how do you see those?
To some degree, obviously, it depends on which shipper you are. First of all, there are two different ways to do the enforceable ones, right? One is doing it bilaterally with the carriers, which some of the carriers are proceeding down. Another one is to go through NICEX, for example, where you got a third party enforcing the contracts. That's different methods. But whether a shipper should enter into an enforceable contract, again, depends a little bit. If I'm a relatively large shipper, where I don't exactly know whether I'm going to ship, and I'm just making up random numbers here, right? But I don't really know whether I'm going to ship 120 or 160 TEU per week on a particular port corridor. But I know it's going to be somewhere between 120 and 160. And I know maybe 50 TEU of those are absolutely critical cargo. Fine, sign up enforceable on 50 that you know you're going to deliver, and then leave some flexibility because that guarantees you space. On the other hand, if I don't really know, am I even going to move anything? I'm going to change my sourcing. Then no, then enforceable contracts are not for me. But if I have a certain base layer of my cargo, which is both certain and absolutely critical for my supply chain, then I would seriously consider for that part of the cargo to try to go down the enforceable path.
Yeah, makes sense. Okay, Lars, this has been super insightful. I would also leave the audience with a few sort of very short-term tips and tricks for how to navigate this, not only for rest of the year but also for 2022 and onwards. I think if you have sort of a shipping order release or an SO release confirmed from a carrier or a freight forwarder, hold on to it. It's gold these days. It's kind of stupid to waste space when there's more demand than supply out there in the first place. So really ensuring that everyone is utilizing that's a clear recommendation. Then also optimizing for the less congested ports. If the port of Los Angeles continue to be sort of on the records up there, look into alternative routing options via Tacoma and Seattle, Port of Oakland, etc. This also goes hand in hand with premium services, as I think Lars points out. If you really need to move that given cargo, sometimes price is maybe not the most important attribute. Its reliability and speed, and premium services is definitely the fastest track there. And then also less than container loads could be an opportunity. If you have certain stock keeping units that you simply need to move, you can break them down in less than full containers, which typically tend to be prioritized by logistics providers out there. And then finally, we continue to see in our statistics from clients that only 70% of the container space is being utilized out there. So do yourself a courtesy of looking into how that container is being stuffed. Sometimes there is an opportunity to actually get more cargo in the container, all depending on the dimension of the cargoes and whatnot. So just a few sort of short-term tips and tricks in addition to what Lars is saying right here. Lars, as always, this has been a great pleasure. I know we're out of time, and that many of the audience will have to jump on to the next session. So thanks so much. Looking forward to catch up with you again soon.
Thanks for having me here.